Alright, so what's cracking? My name is Terrell. I'm getting ready to start a new series on my YouTube channel. I used to do some videos as far as trading goes a long time ago when I was first getting started and when I didn't know what I was doing. And yeah, kind of stopped, took a break, really learned what I was doing, and yeah, now we're gonna start doing some regular, consistent videos as far as like just breaking down how we trade on a day to day basis, and just kind of, dispelling some of the myths that's out there as far as we're concerned at Seven Kings Trading. You know, it's a lot of garbage out there, and that's why it took me so long to learn how to trade. And there's a lot of people out there that never really get to a place of success, and a reason for that is because of the crap that's out there. So I'm gonna do my part as far as spreading the information. So what we do is pretty much supply and demand. If you look at our charts, this is basically what they look like before we start, looking to enter a trade or anything like that. We have our levels. We don't really use any indicators as far as stuff that is mathematical equations and your moving averages and oscillators and all that kind of stuff. We avoid that. That's something that we used to do long time ago when we were kind of bumping our heads, and so yeah, we keep away from that stuff. Now we do use indicators as far as like visual aids and stuff like that. Well, the ATR, we kind of keep that up there just in case we don't have any clear levels to place our stop loss. We will kind of look to that sometimes, but for the most part, we don't really use that either. We have some visual aids just to kind of point out what time, what session it is, and whatnot. We have some other stuff that we'll get into in later videos, but it basically our charts look like this. If you see anything other than this, you may see some arrows for indicator that kind of points out some engulfing candles or whatnot, but that's really it. And so, again, the indicators are more visual aids than anything, because price is king. That's what runs the show. That's what you know. Everything is about price, right? And we believe that when it comes to what moves price, it's supply and demand. It's not an indicator. It's not a moving average. It's not a trend line, and it's not support and resistance. And so this is what we're going to focus on in this particular video. We want to kind of go over the difference between support and resistance and supply and demand, because there's a lot of people out there that kind of teach it as if it's the same thing, as if the two are the same. And then you have people out there that's just blatantly teaching it wrong. So in this video, what we're going to do first is just kind of go over what we consider support and resistance to be. And again, what we consider it to be. You can take our definition, and after the video and you kind of hear our argument, you can decide whether or not you feel it's legit or not. But what we feel like support and resistance is at Seven Kings Trading is basically just a visual aid to let you know whether or not you're consolidating or you're in a trend. So, what do we mean by that? Let's go to a different chart. So, right now, what we would say is we got a break of structure. We had structure right here. So let's just kind of zoom in a little bit. We have some structure here. Right So we had a nice little trend that was coming down, right? And you had this little channel here that price was kind of trading within in this trend. Okay, so we had a bearish trend. It got, this was the first sign of it getting broken here. Once we broke structure here, that was the confirmation that this bearish trend was over on this 30-minute chart, and we were now getting into a bullish trend. Okay, so that's what we use support and resistance for. We're not going to, and again, we really don't need it, because I mean, once you really get your eyes trained to see price, you're gonna see that bearish trend. You're gonna see the higher high, or excuse me, the lower lows and the lower highs. You're gonna see that, but mainly what you're looking for, that has nothing to do with that stuff. You're gonna stop looking for lower lows and lower highs per se, and you're going to start looking for supply and demand. Okay, once you find the supply and demand, you do want to know market structure. You want to understand when you have a breaker structure, because that's important. And that's stuff that, you know, I'm going to touch on in later videos, but for the sake of this, we just want to specifically talk about support and resistance, and its relationship with supply and demand, which it's not really a close relationship, just saying. But anyway, so if we were taking a look at the market, if we were, you know, going over the charts with someone who doesn't really know how to read the charts, then we would go ahead and put some trend lines on here to kind of show what a trend looks like. Okay, but that's really what we would use it for. We're not going to, well, price got down here, so we're going to trade it. Price got down here, so we're going to trade it. Just because price hit a line doesn't mean it's going to, okay, so it respected it here, but it didn't respect it here. How do you know that? You don't. And so really you're gambling, right? And so what a lot of these strategies are out here are basically like casino strategies. Like they're gambling. They don't really have a good idea on why price is doing what it's doing. But there's a lot of stories on, you know, moving averages being magnets and price just having to go back to it. And I mean, when you really think about it, I guess that makes sense, because price goes up and down, and a moving average is just a mathematical equation of what it did in the past, right? So if it was going up recently and now it starts to go down, then obviously it's going to run into that line, right? So, but that doesn't dictate price. Okay, it's lagging, and so, you know, so anyway, and nor does a trend line or a support and resistance line. Okay, so let's get rid of that, and let's see, consolidation. There was a small little consolidation right here. So if we wanted to highlight that, we could go ahead and say, you know, price was within this range for a little bit. We had a nice little bust out there, and then they kind of busted out and hit this demand zone, and it's working its way back up. But yeah, the only reason why we use these is if we're looking to highlight, you know, something like that. But again, it's not really needed once you start looking for what moves the market, which is supply and demand, and we'll get into that in a second. But I just, because there's going to be the critics out there, right, that this is what they believe in, this is what, you know, some of your gurus, this is what they are literally selling to people. And so there's gonna be the critics that say whatever, bruh, like, you know, they're the same thing. And so I will agree that, you know, when it comes to reading the charts, with the indicators that you have out there, the tools that's out there. Um, there's 100 different strategies that you can try, and I've tried a lot of them when I was getting started. That's why I bumped my head for so long, because I was trying all these different strategies that consisted of, indicators and trend lines and a combination of both and all that kind of stuff, right? Well, once I figured out how random um, support and resistance is, it just, yeah, it's no way I could continue to put my money into something that literally I could just. Okay, well, let's get into it. All right. Anybody that trades support and resistance is going to tell you that the more times price hits a particular support or resistance level, the more times it hits, it's important, right? So, what I like to do to kind of put that to rest is we got rid of price, so we can't see what price is doing. We're gonna kind of move the chart around a little bit, right? Um, and go back in time, and let's say right here, and just put a green line right in the middle, right? And then go back, and let's bring back price. All right. So we got price. Where's the green line? We don't know yet. So let's go to a 3-hour chart, see if we can find this green line. Okay, so here we go. Random green line, all right? But it got a perfect bounce right there. All right, so let's see. So perfect support right there. It was resistance here, and I think the term is resistance turns into support, or your ceiling becomes your floor, right? Once you bust through the ceiling like Superman, um, then yeah, it becomes the floor somehow. The whole doesn't matter, I guess. But anyway, um, let's continue to see how important this line is. Look at here. Bang, 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 bang. I mean, these are almost to the pip, folks. And so this line, oops. We don't want to mess with the line. It's very important. Um, so yeah, we got resistance here. We got resistance here. Resistance turns into support. Another support. I mean, like literally. I mean, I would have to say the line is very important. So, um, what we want to do at this point is come up with a strategy where basically we could see who is the best at covering their eyes and turning around and picking a random line on the chart that can see if price hits it the most. Like that's gonna be the new trading challenge and the trading strategy for 2022. We're gonna start it right now, middle of 2021, because it's the best strategy ever, right? We put a random line on the chart, and this line is being respected. I mean, like it has to be important. You know, doesn't matter that it's random. Doesn't matter that I just picked it out without anything on the chart, literally a blank chart. That doesn't matter. But maybe I cherry picked. Okay, so let's go to something that I don't even trade. We're gonna stick to Forex, but I don't mess with that at all. Well, maybe you think I'm lying because there's stuff up here. I swear I don't trade this, but we got it marked up. Let's go to something else. Definitely don't trade that. So yeah, that's some old stuff. Yeah, we got quarters lines on here. This is very old, so we'll get rid of that. Um, yeah, so like I said, my journey very similar. I've gone through, I all the stuff out there. I've pretty much heard about it, um, and tried it, um, and yeah, it didn't work. Here's the thing: I've blown one account. It was a Nadex binary options account when I first got started, $400, and the way that it happened just made me very cautious from that point on. I demoed a lot of stuff, so I didn't really blow money because it was I got into this to invest, and so I wasn't going to invest in something that I wasn't confident about. But I knew the potential, so I stuck with it. And I went through a lot of different stuff. But anyway, um, in that journey, I found that the only thing that really moves the market is what moves the marketplace, and we're gonna get into that. But it's supply and demand. But anyway, we got another random chart. Um, no price. Let's just kind of move around, take it off auto, so we can slide around and okay. And then we're gonna put another random line right in the middle. Go back to the beginning of the chart. Let's bring price back and auto. Okay. And then 3 hours. See if we can find a line. It's up there. Let's go with a daily just to make it easier. Okay, so here we go again. Very important line. It's very random, but to the pip right there. Didn't quite get to it, but most people use areas anyway, right? So there would be a little rectangle, I'm sure, that would touch that. But anyway, you got resistance, to the pip here almost. We had a little bit of support where, it kind of violated it, but, it was support that turned into resistance right there. Let's see again, right here to the pip. Resistance that turned into support, um, almost to the pip right here. These levels super important. like, so you gotta trade them. That's the thing. Like, if you don't, then you're missing out on like the best strategy out there, right? So the next time the price gets here, because it reacted to it here and all those other times right there, you have to trade it now because it's important. I mean, based on the rules, it has touched it. Okay, didn't touch it these times. Okay, so we'll kind of play it by the rules. Touched it there, that's one. Touched it there, that's two. Touched it there and there. 3, 4, 5, 6, 7, 8, 9, 10. See how far we could go back. 11. So, a lot of touches, right? So, it's got to be an important level, and so you have to trade it. Now granted, there's got to be correlation, I'm sure, of other trend lines, and so you got to put some trend lines on here, and make sure that when you trade it, that it busts through these trend lines that you're gonna have up here like this, and so when it gets up here, then you're waiting for it to bust through this trend line, and because these lines are what move the chart. Like the brokers, the market makers, the people that are filling the orders, they understand that you guys are putting these levels on your chart and you're dependent on them, and so they make sure that price bounces off of it. That's how it works. So obviously I'm being sarcastic and facetious, and I'm like that sometimes, so kind of get used to it, but what I'm saying is it's random. Like, you can see from what I just showed you that it's random. Like, you can't give me a logical explanation, on why that level is going to get a reaction from price. Now granted, we put it there and we saw 10, 11 touches on it, right? But 10-11 touches going back to, I want to say, what, 90 something. Yeah, I mean, the line isn't there where we could bring the line back. So we could bring the line back, and I think, yeah, going back to the data was, yeah, to like 94 or something like that. But we got touches up until about what, 96, 97. So yeah, it's random. And if you want to put your money into that, without being able to explain to me why price is going to react to it, then yeah, I mean, go for it. Me personally, I need to understand why something is going to happen, right? So, like, if I'm investing in some real estate, I want to know what the area is about. I want to know what that market is like, right? I want to know if it's if there's gonna be hurricanes and stuff like that. Do I need a certain type of insurance on it? Like, if I'm going to put my money into something, I'm gonna do my due diligence to make sure that I'm investing it the right way and not just putting it into something that tomorrow can turn to crap, right? So I can't do anything random like that, and so for me, trading was stagnant for a long time because of this. And then I came across actually why price moved, and that changed everything. So let's get into that. That's support and resistance. Okay. We're going to go over supply and demand. Okay. And when you're talking support and resistance, again, the concept is the more times price hits it, the more important that level is. When you're talking supply and demand, it's the complete opposite. Okay? And we're going to explain that as well. But let's got a little diagram that we put together for you here. Okay? So let's highlight this area here and make that yellow. Okay. So we're going to say that these candlesticks here represent in the millions. Okay, so we're talking 10 million, 10 million, 30 million, right? So this is supply and demand. Okay, in any marketplace, if you have more supply than you have people to buy that supply, you're going to have price go down. Okay, because they have to get rid of the supply. Okay, otherwise it's sitting there, it's a waste, and that's not making anybody money. Okay, so if there's more supply than you have demand for it, price is going to go down. If you have more demand than you have supply, that supply now becomes more valuable, and so price goes up. Okay, this is what moves any market. Okay, whether we're talking selling cars, whether we're talking Michael Jordan, perfect example. Okay, I'm pretty sure anybody watching this video is familiar with Michael Jordan, if not him, his shoes, right? And so when he puts out shoes, it's the same shoes. Okay, like there's not really been any new J's in a long time. And so when he puts them out as retro or whatever, but it's pretty much the same shoe. They twist up the color, combination every now and then. But the fact of the matter is, it's the same shoe, but everybody is still going crazy over it. Why? Because he doesn't put enough out for everybody. Okay, he understands, or his team understands, how supply and demand works, and so they know if they was to put J's out at the same rate as you would put out, a regular pair of Reeboks or something like that, You can't charge $200 for that. Okay. But if you only put so many units out and you have a craze already ready for them, you don't have as much supply as you have people wanting that supply, the demand for it, right? And so you can kind of charge what you want. And so this is how supply and demand works, okay? So let's go back to the example here. Um, if you have 10 million buy orders in the market and then you have 10 million sell orders in the market, price has no reason to move away from this level because everybody agrees on the price. Okay, you have as many buyers as you have sellers, and so there's no reason for price to move at all. Okay, now if you run out of sellers and you still have buyers, and in this case you end up with a lot more buyers than sellers, you have more demand than you have supply, and so price has to go up. Okay, so who's able to make these type of phenomenons take place? I can't make it happen. You can't make it happen. um, Unless I got like a big hedge fund watching this video, and if I do, that's awesome. But I'm pretty sure they have other things to do. So I would imagine the people watching this are people like myself who were not trading millions of units at a time, and so the big companies, as far as your banks, your institutions, your Goldman Sachs, your Citibank, stuff like that, those are the ones that's able to make those moves, right? So we pay attention to moves like that so that we can see when the big money comes into the market, okay? But we also understand how supply and demand works, and we understand that if we have more buy orders than we have sell orders, we have more demand than we have supply, and price is going to go up. Okay, and then when price goes up, usually it's because those big companies bought up all the supply. Okay, and so price has to go up. Okay, because there's no more supply to fill the demand for it. Okay, and so they basically go scoop it all up, and then when price goes up, then they sell it to the people that are foolish enough to buy it up here. They sell it to them, and then price comes down. Now what happens when price comes down? When price comes down, what do we have down here? This is the important question, right? What's down here? So if we're saying this space, okay, that's why we kind of highlighted it in yellow. If this space was representing 10 million, okay, and then 10 million got filled, okay, or excuse me, we got 10 million, then it got out of balance at that point. We didn't have anything to balance out that 10 million. What should be left in this order right here? There should be about 20 million left, right? Let's put it right there. So should be about 20 million left, correct? So if we have 20 million left, unless something crazy happened and we ended up getting 20 million sell orders coming to the market out of nowhere as well, there should still be a lot of demand down here that doesn't have the supply to match it. So we should end up with a reaction. Okay, now we don't know how big of a reaction. We don't know how much really of that 20 is going to get filled when it comes back down here. Okay, is there sell orders that accumulated when it left, that when it comes back down here it can kind of balance it out a little bit before it takes off, right? Or did we get pretty much nothing? And when it gets down here, there's an immediate reaction off of it. These kind of signs tell us how strong the level are. Okay, and so that's stuff that we can definitely go off of as far as if we want to trade it more than once. But usually we only trade it once because it's going to come down here, kind of hang out for a second, and then respawn. Well, if it does that, we don't know how much of this 20 got filled. Okay, and unless we get a wick off of this level, we don't really know how strong it is when price decides that it wants to come back to it. Okay, and a lot of times what you'll see is it'll go deeper into it because it basically there's more sell orders to kind of fill before it makes that move away, and it's usually not as high. And if you notice, for all you higher high, price action traders out there, what's happening here? We have a low, and then a higher low, and then a lower low, and then a higher low, right? Okay, and so to kind of dispel the idea that every time a level gets hit, it makes it stronger. No, it's the opposite, because we have orders at that level, and the reason why price moved away from it in the beginning is because an imbalance took place for one reason or another. Either you got more sell orders than you did buy orders that came into the market at that level, or you had more buy orders than sell orders that came into the market at that level. Okay. Either way, they're orders that we're dealing with, not magical lines that price gravitates to because it's a magnet. Okay, it's orders that move price. Okay, and so I hope we're making sense. So basically, every time price comes down, what we should expect is for that level to get weaker, and ultimately, that 20 is going to dry up, and you're going to end up, moving through it or bouncing up and going up, and, they'll take it up and sell it up here, or, come down here, buy it for even lower, sell it up here. And it's just an ongoing thing that happens every day. So anyway, let's come down here and find an example for you. Let's see. We have this level that got touched last night. But let's see if we can find something with multiple touches for all of you support and resistance people. Okay, so resistance becomes support, right? So all the support and resistance, folks, what you see here is resistance, right? Well, what I see right here is price come up to this area, right? Price comes up, and we have buy orders, we have sell orders, and then we have buy orders that shoot away. Okay, so that little phenomenon tells me that we now have an imbalance at this level. Okay, we had people that were interested in buying and selling at this level, and somebody bought up all the supply here. Okay, and so we expect the demand to still be the dominant energy down here. So let's get this extended and change that to green. So alright, so we expect price to come back down into this area and get a reaction, because again, we have buyers and sellers, and then the buyers just completely exhausted anything they had to do with a sell order down here, and to the point to where price got away from it and never got back. Okay, so we expect a response, and you got that response right here, right? And remember what I said about a wick, and so it wicked away, And so that tells us that there was a lot of demand down here. Okay. And so when it wicked away, there was a lot of demand, but we also had some supply up here. It came up here, didn't quite get to all of this imbalance, but that's another story. But we came down and got another touch, and price came down deeper right here. Okay, and then we got a third touch, right? And then the fourth touch. Okay, and if we're talking about this line, okay, we violated it here, bounced off of it here, bounced off of it here, bounced off of it here. Okay, came through, busted through, came back up. I mean, like if you were trading off of it, like you got chopped up in that, right? Because you're told every time it touches it, it becomes more important. Now we're gonna trade this level once. Okay, now even though you got this nice response, the fact that it didn't get a huge move off of it tells us another story as well. But let's measure these out just for the sake of showing you how, I mean, the levels are going to get weaker, right? So here, and got a nice little, it's like a little liquidity grab as they because yeah, you had your lower highs, lower high right there, and we never really violated it, but they made it look like it got violated it because of this little move down here, right? So this little trap right here got a lot of people sucked in. This was a nice little move up to get that liquidity grab going, and then they brought it down. But anyway, whole nother story. I'm sorry. I start looking at charts and we start breaking them down. But anyway, as you can see, we have 71 pips here, 58 pips here, 25 pips here. And then again, I think this was a liquidity grab right here, but 63 pips. And so as you can see, they gradually got smaller. This one kind of came up, but never got above that one before ultimately busting through that level, right? And then it became resistance at that point, I guess. But anyway, I hope we're making sense. It's not random when we're talking about why price is going to react to a support, or excuse me, a supply level. If it's a demand level, we know price is going to react to these levels because of the way business works. Okay, the levels showed that the people were willing to pay at that level, and so somebody recognized that, came in, bought up all the supply so that they can then control the price to a certain extent and then sell it back to people at a higher price and make a profit. This is pretty much how it works. Like, I live in a real estate market where that's what's going on. Like, it's a lot of land out here, so they're playing monopoly. They're coming in, they're buying it up at a low cost, and we're talking about people from other states. Companies, not individuals, companies are coming in here, buying up the land at a low cost, building, and then selling it at a higher cost. I mean, like, it's supply and demand. That's what runs the markets. And so we're going to kind of just end it there, because I can go on and on as far as like why this is important, but we're going to put more videos out. And what you can look forward to is every night we're kind of going to go in the market, and I'm going to mark up GJ and GU and kind of show the supply and demand levels. And I'm going to do this pretty much every trading day of the week so that we can then go back and look at those levels and kind of see how consistently they work and how price reacts to them and whatnot. And so right now, this is what we're looking at on GJ, as we have a little supply level here that price is kind of working its way back up to. So hopefully we can get into that sometime this morning. And then if we go to GU, kind of similar. We're looking for price to get back here. We have this little supply level right here. So wait for price to get back up to here. We could get a response off of here as well. But ultimately we're hoping to get back down to this nice little demand level down here. See if we can get a response off of that. But that's what we're looking at tonight. I'm gonna make a separate video of that real quick. But yeah, I hope this video kind of broke down the difference between support and resistance and supply and demand. And again, support and resistance is a thing. I'm not trying to say it's not a phenomenon. I mean, you can definitely put lines on your chart, and those lines will get respected to a certain degree. Again, I believe this is a language that is that has to be deciphered, and those who know how to decipher it the best is going to have the most success. And so the more you get confused, the more you don't understand why something is happening, the more vulnerable you are to tricks and stuff like that. So understanding what moves the market is going to put you in a more consistent position to be successful. So I hope the video was helpful. Definitely like and subscribe to the video if it's something that you got some value out of. Again, we're going to be doing more of it in the future. If you have any questions, definitely hit me up in the comments. As long as it's not like any silliness, trolling and stuff like that, I'll definitely respond. Even to the people that may have some criticism or whatnot, we can have a conversation. I have no problem with that. But yeah, if you have any questions, let's talk about it. And if you're trolling, I'll just ignore you. But other than that, I look forward to getting some more information out there to you guys. Happy trading. Let me see if I can make some money. Peace out.